Hi, my name is Glenn Cook and I'm the term guy. Today I'm going to show you how your bank mortgage life insurance may not actually pay off your mortgage. So you sign your mortgage papers at the bank and the bank employee asks if you want mortgage life insurance. You're a prudent person and want to protect your family, so you check the box yes. You go home safe in the knowledge that if you pass away prematurely, your mortgage will be paid off for your family. But wait, there's a variety of circumstances where your family may not actually have the mortgage paid off. I'm sure it's an unpleasant surprise for your family to find out after the fact, after you've passed away, that the mortgage actually isn't paid off. So, the first way you may not be covered is due to the way bank mortgage life insurance handles medicals. It's called post-claim underwriting. They underwrite after the claim is received. So basically what the banks do is they accept everyone who says that they qualify for the life insurance without any real underwriting. Then should you pass away prematurely, that's when they look at your application to decide if you're actually insured. We have a link on our articles page at mortgageinsurance.ca to a CBC Marketplace video that shows how consumers can rarely, if ever, actually answer the medical questions on bank mortgage life insurance correctly. So if you pass away prematurely, then the bank pulls up your application and decides that even though you've been paying premiums, you were never actually covered and therefore zero mortgage life insurance. This is actually crazy. Let me make up some numbers to illustrate. Let's say 1,000 people apply for bank mortgage life insurance, and let's say 500 of them don't actually qualify. But of course they don't know that they don't qualify because the application wasn't medically underwritten. Now out of those 500 people, let's say 10 of them die. And of course those claims are denied. The bank doesn't pay out those 10 claims because they never actually qualified even though they've been paying premiums. But let's look at the other 490 people that we somehow know that never actually qualified who didn't die. They simply continue to pay premiums to the bank even though they never actually have coverage. They're paying premiums. Nobody knows that they have coverage. If they should die, they find out then that they were never actually protected. This is pure profit for the banks. Now, the second way that the banks may not insure your mortgage completely is based upon how they handle their maximum life insurance limits. If you take out a mortgage, the banks have maximums, and if your mortgage is large enough, you may not actually be covered right from day one for the full amount of the insurance. So let's say you take out $1 million mortgage and the bank's maximum is $600,000. Right from day one, you're covered for only $600,000. Now clearly, most people understand that. It's a deficiency, but one that at least that they're aware of. Now, time goes on and you pay down your $1 million mortgage down to $600,000. At that point, you'd think properly that you would now be fully covered. If you pass away, the bank is going to pay $600,000, but that's not the case. What the banks do is they maintain your original 60% of coverage as you pay down your mortgage. So if your mortgage has now gone down to $600,000 and you pass away, they're only going to pay 60% of the $600,000 or $360,000, and the remaining almost $250,000 of your mortgage is still going to be owing to your family. Now, let's look at term life insurance like we offer here at mortgageinsurance.ca. When you apply, the life insurance company performs a medical history interview before they offer you a policy. That's the medical underwriting that they do, and it's done, again, before they give you a policy. This severely restricts the life insurance company's ability to deny a claim after the fact, particularly if you fully disclosed everything during your medical history interview. Secondly, with term life insurance, instead of being limited to lower limits like $600,000 of maximum coverage, right from the day one, you can apply for a $1 million term life insurance policy and be fully covered for your entire mortgage right from the start. And of course, as you pay down your mortgage, that $1 million of term life insurance coverage is level. It remains at $1 million. It does not decrease with you as you pay down your mortgage, and that's guaranteed. And that's why every consumer advocate in Canada that I've ever heard speak on the subject of bank mortgage life insurance advises consumers to switch to a term life insurance policy.